Hey everybody, welcome back to the channel. If you are new around here, welcome. And if you are a returning subscriber, thank you so much for coming back. I do appreciate you guys being here. So every time, you guys know I'm big on research, right? If you are investing, whether it's dividend stocks, growth stocks, funds, whatever it is, you should always be researching and, expanding your knowledge, even if you are a beginner. And every time I find good articles and good reads while I'm researching, I like to share that with you guys. So I wanted to share a really good article from Motley Fool. If you do not know who they are, you should really check out their website. Really big investing site like marketwatch.com, Seeking Alpha, Yahoo Finance. Again, a really good site, has a lot of good articles. And if you're a beginner, I think you would find a lot of the information easily digestible, right? Because there's a lot of terms in the stock market. Trust me, I know. But yeah, I think you would like it. But I wanted to share with you 5 dividend stocks that, you should consider looking at to buy. Now, I'm not telling you to go buy it. I'm just trying to put these on your radar. Now, we do own a couple of these, so it's always nice to see like our positions on the list of these, investing gurus and, the professionals, because it shows my husband and I that we're thinking on the right track. Okay. So again, if you do not know what dividend stocks are, dividend stocks and funds, are companies that pay out a piece of their profit back to their shareholders. And if you own, let's say $10 worth of stock, if you own a whole share, maybe you own 100 shares or 1,000 shares, you are considered a shareholder. Now, depending on how often these companies or funds pay out, it will dictate your income. So I know a lot of you like a lot of monthly income dividend stocks and funds. A lot of you like quarterly. A lot of you just are okay with if you get paid once a year or twice a year. Whatever your strategy is, with that, whatever your comfort level is, just continue with that and watch your wealth build up. Now, you may be asking me, Shalise, well, what do you like? I like a lot of monthly and quarterly dividend payouts because it helps to increase our income faster for early retirement. Remember, you cannot touch a 401k before 59 and a half. Or an IRA. You can touch like your Roth IRA contributions, but there's a 5-year wait. Just overall, it's for your later retirement years. But if you want to step away in your 40s or 50s, you need income to do that. And that's why I love dividend investing and taxable accounts. After we max out the 401k and the Roth and all that, we like taxable accounts. So the first company on this list is Lowe's. So I'm going to bring up Lowe's here in Robinhood so that we can see it. You see the ticker symbol is LOW. Now, we actually have one or two Lowe's. No, I know we have one literally like 5 minutes from our house. But Lowe's are very plenteous around where I live. And so they're down, for the past year about 15%. But Lowe's is really a solid company, excellent CEO. And with the cost of, how much homes are going up, a lot of people are opting to stay in their current homes and just update them, which is pretty cool. And I like Lowe's because it's not as exciting, as a Tesla or a Microsoft, but it's a slow growing company that just, minds its business. I love stocks that just stay under the radar and minds its business, right? It's not really volatile, which I love. So if you are staying home, I know my husband and I have been renovating and updating our home more and more. We redid our deck. We're putting a new shed and garage, or, updating it and all of that. We redid the driveway. Just things like that, pour money back into your home. And the places that people go, is Lowe's, right? Is Lowe's. So again, you see it right here. You can see again who the CEO is. You can see how many employees they have, where their headquarters are, and when they were founded. You can see their dividend yield, 2.08%. We do not have this position currently, but this is on our radar. We have like a huge dividend watch list because we're trying to not spread ourselves too thin. But yeah, we really do like Lowe's. And, I think it's if you're a DIY person, then I think Lowe's may be a good option for you. Next is Walgreens. Now, I really do like Walgreens. We actually own Walgreens, not in Robinhood, but in another portfolio. Let me pull up Walgreens here in Robinhood. But yeah, Walgreens is a solid company. They're like the main competitor to CVS. We also own CVS. I figured instead of owning just one, why not own both of them? I go to both of them to shop, more so CVS, but I do like Walgreens as well. You can see Walgreens is at $32. They are down in the past year. You can see about 30%, but ask yourself, I mean, honestly, where is Walgreens going? I mean, the market last year in 2020 and this year is red. I mean, again, nothing is immune. If I pull up VTI, VOO, QQQ, the safe companies that you think of, like Microsoft, they're all down. I mean, no one is immune to this. Every good company and fund is down as well. So you ask yourself, do you believe in these companies? And if you do, continue to invest. But again, Walgreens is great because it's one of the largest retail pharmacy operators in the world. How many of you get your medication from there, right? And also management is also pretty good. It raised its long-term target for the U.S. healthcare segment. We all know that healthcare in this country is sky high, and a lot of pharmaceutical companies make money off of people being sick. It's so sad to say that, but that's the truth. So one of the things that we can do outside of making sure we are prioritizing our health, going to our doctor's appointments, eating well, making sure we're active, is to invest in some of these companies to get a little bit of our hard-earned money back. Look what's number 3 on the list. Realty income. Now, you guys, you already know, right? You already know how I feel about realty income. This is my favorite dividend stock ever. It is currently down about 8.88% this past year, about $61. You can see we have a realty income here in Robinhood. We have 123 shares, a little over that, but we're down about 9%, but our position is about $7,500. But realty income is a stock we buy every single paycheck. If I get a paycheck from my business and my husband gets paid from his job, his side business, my website, sponsors, things like that, I'm always buying realty income. It pays every month. It's known as the monthly dividend company. It's a dividend aristocrat, which means it's been paying out a dividend consecutively and increasing its dividends for 25 or more years. So yeah, I love realty income. And it's always great to see it on this list because, I again, not financial advice, but I really do love realty income. Scrolling down to Johnson & Johnson. Now, one big reason that we cannot have Johnson & Johnson in our portfolio is individually anyway, is because, my husband works in the clinical trial sector of the pharmaceutical world without saying too much. And he cannot own Johnson & Johnson. If you know, you know. But again, Johnson & Johnson is a great company. I mean, many of us have their products like in our medicine cabinets, in our closet, in our first aid kit. I mean, we know their products. We believe in them. Johnson & Johnson is a dividend king. So they've been paying out and increasing its dividend for over 50 years. This article actually says 60 years. So that's actually pretty awesome. They had a split that's going to be going on in 2023. I'll make a video talking about that later, but you can go to Google and research that. But again, Johnson & Johnson, I mean, even if you don't know a lot of the fundamentals or management or, like a lot of the financials, you know it enough to know that Johnson & Johnson has been around probably longer than most of us who's watching this video have been born. Okay. I'm 38. So Johnson & Johnson has been paying its dividend out longer since I've been born. So again, it is what it is. And then last but not least is Target. And I love Target because we own it 50 shares and we are capped at our share size for Target. I love Target. I actually prefer Target over Walmart. Again, this personal preference, not just the company, but I like going to the stores more so than Walmart. I like that Walmart has a solid customer base. There are people who, they talk about it, they make fun about it on like TikTok and other social media platforms about, Target has this ability of making people spend more money than what they really want to, which from a business perspective is great, right? Target knows this. They have good lighting. They have their store organized. They have friendly employees, and they know that if they can, turn up the customer service notch, it'll get you to spend more money. With them. It's a really genius marketing tool, to be honest. And so now again, Target has had some slumps as well. They are down quite a bit this past year. Let me see if I can pull it up. Let's see, type it into here. they're down as well. They've been having a lot of issues with people stealing out of their stores. So has Walmart, and just a lot of the other retailers, which, you know, it sucks, but they've been putting things in place to help mitigate those losses. But they pay out over $1 per share in dividends, which is amazing. And we did get a dividend from them in March. So if you want to know how much we got in Target, again, make sure you stay tuned because that video is coming out next week. So, yeah, those are the 5 dividend stocks that should be on your radar for 2023. Again, I think Motley Fool did a great job. I'll have the article linked down below if you want to go check them out. Really good read, a quick read if you're a beginner. Easy to understand. And if you are a beginner, I have a beginner 101 investing playlist. Check that out if you want to know what a 401k is, a Roth is, index fund, ETF, a lot of fundamentals. If you want to know how to open up an account, all those videos are right there. So I hope that you guys enjoyed the video on today. If you did, please make sure you leave me a comment down below. Do you own any of these 5 share companies? Lowe's, Walgreens, Realty Income, Johnson & Johnson, and Target. Yeah, let me know down below. Again, thank you guys so much for watching. Please make sure you follow me over on Instagram if you haven't already. And again, take advantage of the sale before it ends April 1st. But yeah, take care, and I'll see you guys in the next one. Bye-bye for now.